Good morning. This is Larry McMillan, bringing you a market comment on Monday, October 25th, before the market opens. Well, we have quite a few cross currents now. The market staged the big rally beginning on October 14th, which took it all the way to the new high, the all-time highs, and it made a new high by a couple of points, but then actually slipped back a little bit on Friday. The problem here is that it's not punching on through, and it did run up pretty far in that 5 trading day period to get from the lows of October 14th to where it closed on Friday. So we really, ironically, still needed to break out a little bit more to establish the new highs. Most of the indicators, though, are positive. Not all of them, though. We still have that McMillan volatility band buy signal in effect. The put-call ratios are on buy signals, especially the weighted ratio is turned down from extremely high oversold pessimistic level, so that's a positive. The breadth oscillators are clinging to buy signals. They have not exactly exploded to the upside with the index, although they did, get into overbought territory by a little bit. If they fall back from here, they would probably be the first ones to generate an actual sell signal. VIX, the spike peak buy signal of October 1st, is still in place. And now that VIX itself dropped back below its 20-day moving average, the trend of VIX is down as well. So those are positive things for stocks. And then the term structure of the VIX derivatives, volatility derivatives, is also positive. So everything is basically positive except for the chart of S&P, which has stalled right around the old highs. So there's a question here. Are we breaking out to new highs and therefore everything is back to an uptrend? Or are we at the top of a trading range between, let's say, the current levels around 45.50 or so, all the way back to the October lows at 4,300? That should be answered pretty soon. There's one potential clue, and that is that there's a lot of gaps left on the S&P chart on the way up, and most of the time gaps are filled. In fact, all of the gaps in the last couple of months have been filled fairly quickly, so that would indicate more for the trading range philosophy. Not necessarily bearish, but a pullback from here to maybe regroup or something. In any case, we're not maintaining a core bearish position anymore, but we wouldn't turn completely bullish until S&P can make a 2-day close at, evidently new highs, so like 45.60 or so, not by just a point like it did last week. In any case, we're going to trade individual signals against or around any position that we might have based on the S&P chart. So I invite you to visit our website, subscribe to our newsletters where we cover these things all daily, and have a great week trading.